Good morning, good afternoon, good evening, depending where you are on the planet. Welcome to the Tuesday, 26th of July early running. We're 15 minutes early this morning, so apologies if you got up and you were halfway through this or you saw it on the catch up. But yeah, I did post it in the activity feeds yesterday. But earlier start today, 12:15 start. That's UK time. That's where I am. 6:15 Central, 7:15 Eastern. Normally, obviously, we're starting 15 minutes later than I've just started. But welcome everyone to Tuesday, 26th of July webinar. We're going to go for a usual regular run through in here today. It's a little bit time constraint, so we will be finishing after about 20 minutes. But that gives me enough time to go through everything that I need to go through. Any questions, please put them in the chat that is located below this live stream. So let's kick off. I'm going to take a look at, let's have a little bit of a recap first of all. So a very, very quiet session yesterday. S&P pretty much flat on the session. NASDAQ was a little lower on the session yesterday. Markets kind of marking time ahead of the Fed. We're a little lower in here also this morning. And if we go and take a look at just where we are, European stocks slightly lower in here this morning. Not a huge amount coming through this morning. DAX is the biggest hit in here, probably on the back of the fact that this with the main piece of news really we have is twofold. Russia saying they're going to curb supplies of gas to Europe, and then also Europe passing a bill to try to limit the amount of gas being used going into the balance of this year. So those two things in here damaging slightly the euro certainly, and also damaging slightly European stock indices in here. US stocks are dipping lower on in sympathy that they were dipping into the close and post close yesterday. We're about 0.5% down across the board going into today. So more of a consolidation than anything else. If we look at the earnings calendar, this is going to be super important, as well as obviously got the Fed tomorrow. But even ahead of the Fed, some really big names, not till after the bell, though. We've had some big names pre-bell. We've already had those in here this morning. We've already had Coca-Cola beating estimates in here on both revenue and earnings per share, and McDonald's beating on earnings per share just, and a slight miss on the revenue side in here. So mixed bag in there from Coca-Cola and McDonald's thus far this morning. The big hitters are coming later in the day, though. We've got Visa to come as well, but really the big focus is going to be on Google/Alphabet and also Microsoft, all reporting after the bell this evening. They're going to be the big focus going into the day. On the normal macroeconomic calendar in here today, consumer confidence probably the main focus. We get that at 10 a.m. Eastern. It's going to be 9 a.m. Central, and that's not till this afternoon in the UK. So where are we with that? We're going to be at 3 o'clock. Yeah, 3 o'clock, 3 p.m. if you're in the UK. And then at 16:30, API weekly crude oil stock in here. Don't forget to watch that. I'm sure if you're an oil trader, you're well aware of when those weekly oil stock data are released. So 16:30 Eastern time today for that. So consumer confidence, the main focus today. New home sales rarely moves markets in here. So it's going to be the focus on that consumer confidence data as we go into today. And then after the bell, as I say, Microsoft and Google/Alphabet. Yesterday, as I said, market ends fairly quiet. Looking at 5 things to start your day in here. They're leading actually with this Coinbase probe, which incidentally, I wrote an article on myself this morning. So here I am. Yeah, it's an old photo of me. Very useful looking photo of me. But SEC to probe Coinbase on crypto listings. Not really impacting markets we're looking at. It did impact slightly the crypto markets yesterday, and maybe that took us into more of a risk-off phase and maybe dragged stocks down potentially. But I think it's more stocks that are moving crypto rather than crypto moving stocks. But nevertheless, it did seem to have a negative impact on stocks yesterday. But anyway, they're leading with that in here. And I say there's an article there if you want to go to Ask Traders. You can find that article in here. I'll put it in the chat. I know you can see what comes up in the chat. Can you click on it, guys? I'm just going to put this into the chat. Can you actually then click on that? Just be interested. It's not an experiment we've never done actually with the chat. Let me know if you can, if anyone wants to go into the chat and let me know. I've just posted in the chat there whether you guys can click on that and see that. It'd be useful if we can going forward. I can share some of the links that I'm talking about. What else do we have in here? So stocks mixed before Fed, similar headline in here to what Reuters ended with yesterday. Energy up as EU cuts steel. So that's because of that, the energy cutting that deal. Energy mining firms rise with commodities in here this morning. But most stocks in here across the board are slightly lower in here as we wait for the Fed going into today. And there's an article in here. So actually a note in here on 5 things. I think it is on 5 things in here. Is it? No, they don't mention it. There's not much in here. So they're talking about oil rising again, tight physical market in here at the moment. And then something, some stuff about Elon Musk, who really cares, commodity prices pushing back higher, and then looking at the data. There's really not much in there on the 5 things to start your day. This headline did pique my interest, though. So Bow's bond market recession indicator is sending a warning. We've spoken at length throughout 2022. Obviously, a lot of you guys have only been with us more recently, but we've been talking about the inversion of the yield curve and how that is a signal of a potential recession. And back, God, I can't remember when it was. It was like months ago. It was when I wrote this article, actually, this blog. So there's a blog on our site in here, and I'll share that. Hopefully you can get these links. But if you just go to it's actually not to the members area. This is actually in the public area at tradeday.com. If you go and look, actually at the bottom of the pages in here, you'll see trading advice and tips. That's where our blog is, under trading advice and tips, and you'll find this article on the yield curve. I've just shared it in the chat. Hopefully you can see that. And in this article in here, so when did I write this? Because it was just before I wrote this. When did we post this? Has it got a live time on it? Don't think it has, actually. It hasn't got a time when it was posted. No, it's not on there, unfortunately. But when I posted this, I think it was early in Q2. Powell had said that the market was looking at the wrong part of the yield curve, because a lot of the time people look at the 2s 10s or the 10s 30s or the 2s 30s segments of the yield curve. And when that inverts, that's a sign of a potential recession anywhere between 6 to 12 to 18 months down the line. Read this article if you don't know much about yield curve inversion and why it signals a recession. This goes from the very basics, right? What are bonds, through to what are bond yields, to what is the yield curve, to what is yield curve inversion, and why is yield curve inversion important, and where we are. Well, this is where we were. Okay, in late March. Here it is. Look, in March 2022, the 530 yield curve inverted for the first time since 2006. Since then, the much watched 2-year, 10-year sector also inverted. But this is the thing. Powell told us, right? Here it is. Look, Monday the 21st of March, in response to a question, Powell said, frankly, there's good research by staff in the Federal Reserve System that really says to look at the short, the first 18 months of the yield curve. And what he was talking about there was the implied yield on 3-month T-bills in 18 months against 3-month T-bills, okay? That's what he was talking about. Basically, implied yield on 3-month T-bills in 18 months' time, that forward rate against 3-month T-bills now. And now in this article, what it's pointing out is that is saying that's his preferred reading of whether, if that inverts, then it signals a recession. Well, the difference between the rates on the 3-month bills are now where they will be in 18 months' time. So that's 3-month bills to 3-month bills in 18 months' time has tumbled about 95 basis points in July, the biggest month decline in data starting in 1996. Okay, and he's saying that if that inverts, okay, down here you can see. So now it's trading around 50 something by the looks of it in here. 50 something basis points, and that's plunged all the way down from above 250. If that inverts, okay, that is a signal, and that's what he's saying. He's saying when that inverts, 3-month bills versus 3-month bills in 18 months, that is the sign, okay, and of a potential recession down the right line. Now, it's not signaling it yet, but obviously with that implosion, okay, that collapse, that flattening of that part of the yield curve in here, that is saying that is potential, and that is, according to him, by his own statement, Chairman says highlight a recession indicator is potentially sending a warning of future inflation. I thought that was interesting, more of a teaching point there than anything else if you're not really aware, and the fact that Bloomberg were pointing at that. If you don't know much about the yield curve, go take a look at that blog post. That's at tradeday.com. Remember, go down to the bottom of the page, look at trading tips, okay, trading advice and tips, and you'll find that blog post in there that I put out back in April, I think. Okay, so this is just talking about what we've already discussed already. Russian gas cuts to Europe hits economic hopes. Ukraine reports attacks on coastal regions as well. Europe has agreed in here. What's this one? Europe agrees compromise gas curves as Russians squeeze the supply. So Russia is squeezing supply on one hand, and Europe are trying to curb their demand for gas as well. Okay, and they've reached an agreement in here more recently over the last 24 hours. And again, EU countries reached deal on energy emergency gas cuts. They're trying to build up their stock of gas in here so they can get through the winter. Otherwise, there could be a real problem going into the winter. Maybe that's what Putin's waiting for. Might turn off the gas. Who knows? Gas crunch fears hammer euro. The euro got hit on that. The dollar's gone up. Swiss franc rallied against your Swiss franc. Remember, safe haven within Europe. So Swiss franc rallying against the European currency on the back of that. And then if we look where we are today, we've already done this already. About 0.5% down to 0.75% down in European bourses this morning. And with markets fairly unchanged yesterday. Dow's just up slightly. S&P ended up pretty much unchanged on the day. We're down about 0.5% in here this morning with European exchanges. Right. Any questions, please do fire them in the chat. I'm going to go take a look at the charts in here now. So we'll kick off. Oh, this is frozen. Just 1 second. Kick off in here. Go back to the NASDAQ. Okay, so the NASDAQ obviously drifted lower yesterday. We were down. We said that, underperformed the broader markets in here and nudged down below the low that we saw back from Friday, having initially rebound when we were on the call. I was fairly bullish going into yesterday. We're lower again, just dipping slightly again in here this morning. We go into the 15-minute chart. Where are we? Well, now if you look at it on the 15-minute chart, we've got a succession of lower lows and lower highs. It looks a little bit more ominous in here, to be quite honest. It looks a little bit more negative. It's failing again in here this morning. This up here at the top, I'm going to actually zoom out. This is a 15-minute. I'm going to go to a 30-minute now, just so we can see it a little bit better. But I think this is almost like a head and shoulders pattern up the top here. You've almost got a double head, a shoulder here and a shoulder here, right? And it's kind of already broken one neckline. So I would argue there's a neckline here. It runs across here. Let's extend that out. Okay, so it's already flirted and broken that one, yeah? But you can kind of get these return moves. Can't really get back above it. Trying to get back above it, can't. And then I'll just put in the double heads just so if you guys can't quite see that. Where's my... Oh, it annoys me when this happens. Sometimes it just disappears. Does that happen for you guys? It just seems to disappear on its own. Right, where are we? Shapes. I'll just put on a few shapes in there just to give you. So I think there's a double head up here. This is two heads, right? You've got two heads up there. Head. And then we've got, I'd say this is like an elongated shoulder here. Make that a bit bigger. It didn't work very well. There we go. It's a shame that you can't just copy and paste these as well. Won't allow you to do that. And then another kind of shoulder across here. So shoulder here, double head, shoulder. Sometimes you get these double-headed, and then you could almost argue there's almost like double shoulders in here as well. Or you could argue these are the double shoulders, right? You've got these bigger shoulders up here, but you could argue, right, there's lower shoulders here, this shoulder here. So you've got another neckline to draw if this is a shoulder here. So if I go in here, if this is another shoulder here and another one over here, okay, that's developing right now, we're in development, then you say, if this is shoulder, shoulder, head, shoulder, right? Then you could argue there's another neckline to be had, which will be drawn across from here, across here. And we're kind of sitting right on that right now, right? And if it breaks here and it breaks here, okay, so you got this low, the current low, you got the low just from earlier overnight. That's down at 12,266.5. Now, critically, if it takes out that low, 12,235.75. I think even below the overnight low, this looks vulnerable to this being a bigger topping pattern. Yeah. And then we could see a noticeable correction lower. I'm the eternal bull, but this looks like we could go a little bit lower if we start taking out the overnight low and then the low over here. And that's going to be critical down there. 12,235.75. That goes, then I think we could be all the way back down here to like 11,900 somewhere. 11,950, 11,900 ahead of the Fed. It wouldn't be a surprise to correct ahead of the Fed. It wouldn't be a surprise for tech to correct ahead of both Microsoft and Google that we have later, right? So I wouldn't be surprised to see us down here today, right? If it can hold, particularly that low over there, that 235.75, if it can hold the overnight low, and it can hold this kind of flirting with this secondary neckline in here. If it can hold this secondary neckline and rebound, it then needs to get above, I would say, ultimately needs to get above, where are we? Oh, where's it gone again? It's just this magical mystery tour. I'm going to say this peak here, the overnight peak there. It needs to get above there. And that's at 12,375 and 3/4. If you can get above that little overnight peak, you've got the slightly higher peak there as well. You know, I don't think the downtrend lines here are that useful. The slightly higher peak is at 12,357 and a half. No, that's wrong. Scrub that. 12,407 flat. Okay, so those are the two triggers on the upside. I don't think, because we're already through this kind of counter trend line off the actual counter trend line off the top. Let me get rid of that. Here's the counter trend line off the top. But then you've already kind of flirted with that one. So there's not really, and then there's no other trend line to draw in here. So I think it's those peaks, you know, to get above. So upside, I'm just going to recap the levels, guys. 12,375.75 and 12,407 on the top side. On the downside, overnight low, 12,266.5, and that's the critical one there. 12,35.75. Below there opens up a much deeper correction. So looking for those as triggers. You may not get a signal on those pre-open. Okay, you might have to wait to the actual cash market open. I'm not going to go through, because I'm going to be constrained a bit on time, but I'm not going to go through all the same analysis on the S&P. The S&P far less damage. Inside day yesterday, didn't take out the previous day's low, didn't take out the Thursday low here, or the Wednesday low. Look, these important string of lows, holding above those, far less damage. Now, given that, you know, I would argue that the S&P, you know, is seen as the benchmark, but again, you know, you've got this kind of, again, I'm not going to do all the ellipses on here, it'll take me forever. Double head up here, shoulder over here, you know. But where are the necklines on this? Well, you'd say through here, this one's been flirted with, not really broken. You've got the other neckline, then maybe you draw that across here kind of ways, holding that one. That looks like the more important line, this one here. This is the one. That didn't work very well. Let me get rid of that. I'm going to redraw that. This is the one the market, I think, is looking at on the S&P, because it's holding, right? Why is that not allowing me to? I think I'm going to have to get rid of that one to put this one on. Let me go again. Okay. And this one, is that one there? Put that back on. There you go. So this one's been flirted with, this more accelerated one. This one in here, the market, and you can see it's held higher, higher. You don't have that on the Nasdaq. Let's flip back to the Nasdaq. Okay, don't have that. Don't have higher. You got lower low now on the Nasdaq, right? Don't have that on the SP. So you get mixed messages. Okay, not surprising, mixed messages. Why? Two things why we're getting mixed messages in here. One. Is that we've going into a massive event, right? What's the massive event? Well, we've got Fed. Two, we've got a semi-big event, right? You've got earnings from both Google and this evening and from Microsoft. Morning, Clinton. We started 15 minutes early, so we're just rounding off in here now, by the way. So you watch it on the catch-up, okay? I don't know if you've just joined us, but I did put it in the activity feed, put it in the chat and the heads up. But we started 15 minutes early today. So, yeah, I'm just rounding up now. So, yeah, I think it's no surprise that the S&P is kind of telling us a different tale. We've still got the higher highs. Yeah, you've got kind of lower highs here. You don't have lower lows, right? The market's holding in. So the S&P doing a better job in here. Obviously, let's say the Nasdaq in here. We've gone through the levels there. This looks more like a topping, but they both look like topping patterns. The Nasdaq started to signal those tops. Okay, we've not seen those tops signaled in here by the S&P. Hi, Tim. I see you. I don't know if you're just joining us as well, Tim. And as I say to Clinton, yeah, we started 15 minutes earlier today. Okay, I did put it in the chat, in the activity feed, and on the heads up, and you know everywhere I could possibly put it in the on the site. But if you missed that, you can watch all this on the catch up, okay? Because I'm just rounding off now. We've done through. We started 20 minutes ago now, so I'm just rounding off. Yeah, so I think in here, S&P not quite signaling topping pattern yet, holding in. Nasdaq is signaling. You're gonna have to wait for the breaks. You know which one dictates which. You know, I'm always a believer that, you know, the S&P is the benchmark and should be the leader. But however, sometimes when the Nasdaq goes, it pulls the S&P with it as well. So yeah, you know, you can take triggers on both sides. If you're trading either one, guys, you should be watching. You should be watching the other ones as well, right? You should definitely be watching and watching these levels. You know, watching the levels. If these levels break on the S&P, then even if the Nasdaq's not breaking a level, the Nasdaq's going to go. If the Nasdaq levels that we've pointed out here start to break on the downside or the upside, then the S&P is going to go, right? right? They're correlated, very correlated. So you've got to go with it. Right, I'm going to do a real quick nod to the commods. Here's gold. We spoke about gold yesterday in here and looking slightly more bullish, but it's kind of wavering. Very similar in here to the S&P. Two inside patterns, got the rebound just over the last few days, more similar to the S&P. And in here, you'd be worried that, again, this is like a double-headed head and shoulders, right? Head, shoulder, shoulder. Okay, kind of this line's been broken. We haven't broken this neckline here, though. It needs to go down through there, and it's kind of holding that. If it breaks that neckline, though, then that looks like a topping pattern. It looks like we're going back down lower, okay? If it holds that, and that's going to come in, the neckline's coming in around 1713. These lows low is 1712.9, and this one over here, 1711.7. Through 1711.7, you're going to look for a much deeper correction. Let's go take a look. A quick nod to oil. Strong rebound, we said. Hammer pattern yesterday. Really chopping in this range now, really between like 92.5 and 100. It's chopping around between that kind of area in here. Strong hammer pattern yet rebound. Even though we went lower initially, rebound yesterday, further higher today. Where are we on the 15-minute? It's kind of hard to fight that at the moment. So oil looking bullish, yeah. But we do have that data this afternoon, the API data, okay? Right, I'm going to wrap it up there, guys. Apologies if you came on the normal time. Do take a look at, but take a look at this curve. If you don't know much about yield curve inversion, take a look at that. And in reference to what, Powell's indicator sending this recession warning, do take a look at that. Do a little bit of homework for you there, just so you get a better idea and knowledge about yield curve inversion and how bond markets impact elsewhere. Something to maybe take a look at. Take a look at the catch up if you have missed the first 15 minutes because you came on normal time and we started early. Back to normal time tomorrow, back to normal. So 6:30 Central, 7:30 Eastern and 12:30 UK. We're back to normal. Until then, I'm going to wish you a great trading day. Be careful through the Google /Alphabet and also the Microsoft results after the bell tonight. And I'll be back with you with another Bull Bear versus Bear webinar tomorrow. Have a great trading day. Bye.